Now, NAV decay is something a lot of you guys probably hear floating around quite a bit, and this is because a lot of these ultra high yielding ETFs have, at least for some of them, experienced extreme NAV decay, and we've seen this a lot over the last year or so. Now, NAV decay refers to a decrease in net asset value, or NAV, of an investment fund or an ETF, meaning the value of its underlying assets is declining over time, typically due to factors like too large distributions, poor investment performance, or fees, or just an underlying that's decaying also. Now, in this video specifically, I'm going to share with you guys 7 different ETFs that have experienced massive NAV decay at least since inception. I'm going to share with you guys how much all these ETFs have lost over time, along with how much in dividends they paid out and everything else you need to know. Then later on towards the end of the video, I'm going to share with you guys some also super high yielders that have not experienced NAV decay and just sort of go over some of the pros and cons of all this. Either way, if you're an income focused investor, you're going to want to stick around to the end. So if this kind of thing interests you, make sure to drop a like down below, subscribe, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, the first ETF that has definitely experienced some serious NAV decay over the last year or so is TSLY, or the YieldMax Tesla Option Income Strategy ETF, which I personally started buying a long time ago, unfortunately, as sort of just a small gamble position, just because I personally saw the risk early on. But TSLY since inception is down around 71% as far as price return. Now, let's make one thing very, very clear here. Just because an ETF decays in time over price or goes up over time in price is only one piece of the entire story. You have to also account for the fact that ETFs, like all the ones we're going to talk about today, pay a massive amount of income every single month or every single week. So you have to look at everything on a total return basis, but still it doesn't change the fact that a lot of these different ETFs, even if they do pay massive income, the actual investment value has been dropping over time since inception. Now, for example, TSLY has paid around $10.31 over the last trailing 12 months, which is an insane amount of income considering one share of TSLY right now costs around $11-12. So this means that in theory, if you bought a share, if TSLY kept paying what they paid over the last 12 or so months, you would almost return your entire investment in around just one single year. Now, for me personally, in case you guys are curious, I bought around 200 shares of TSLY a long time ago at around $24-25 per share as my cost basis. So as of right now, I'm down around 50% as far as that goes. But all the income that I've been paid over the last year or so, I'm actually not necessarily down whatsoever if you take into consideration my total return. Now, that being said, over that time frame, there's definitely been better things to invest into. And generally speaking, I don't really care if the total return is going to be positive. I don't want to see my overall portfolio value keep dropping and dropping. Now, I know some income investors are probably going to say, with investments like these ultra high yielders, you have to reinvest into more shares and lower your cost basis and play the whole game. I totally get that and respect it. But just for me personally, I don't like buying into ETFs, even if they do pay a massive yield, that are going to keep dropping lower and lower and lower. Now, the next ETF that's down quite a bit, around 50% for this one, is the Defiance NASDAQ 100 Enhanced Options Income ETF, or QQQY. Now, this ETF in the max time frame, this is about September of 2023. This ETF is down just around half, around 50%. But keep in mind, over the last trailing 12 months, it's paid out $24, or just like TSLY, almost the entire value of what it cost to buy one single share. So again, even though all these different ETFs over time have declined in price, again, that's one piece of the puzzle. But to be fair, they have paid out a massive amount of income. So again, you have to kind of take the good with the bad. So for example, in the last year or so, this ETF lost around 41% of value, but it did pay around $25 per share over the last year. So again, not really super horrible. All of that to say though, that this ETF still is down around 50%, which is mind-boggling. Another ETF that's down quite a bit, this ETF is in my personal portfolio. I started buying it probably in this range, dollar cost average down during when it was dropping, and now it's actually been recovering pretty nicely ever since 2022. But we're talking about QYLD, the Global X NASDAQ 100 covered call style ETF. This ETF yields around 12%, so not necessarily an ultra high yielder, but it has decayed around 25% on the max time frame, so it still has decayed quite a bit. Now, in the last year, this ETF's paid around $2.35. So again, nothing even compared to the last few, but I still wanted to include in this video for one reason, because I personally own it, and for two, because it has decayed quite a bit, at least over multiple different time frames. Now, that being said, this ETF has been trading much better ever since 2022, and I'm very happy about that because I currently hold several thousand shares. Another ETF that's decayed quite a bit, this one's down around 48.6%. This is the Yield Max Innovation Option Income Strategy ETF, or OARK. This ETF down just shy of 50%, but it has paid around $4.45 in the last year. It cost around $10 per share. Now the dividend yield is around 43% and it's down around 23%. So again, not necessarily saying that this is the worst investment whatsoever across the entire market. If you look at total return, I'm not saying that whatsoever. But I am still saying that on the max time frame, for those investors that bought up here and just started holding and holding and holding, they're down around 40 to 45%. And that's of course not including dividends, I get it. Now another one that's decayed quite a bit that I actually just started buying as of recently is the Yield Max Coin Option Income Strategy ETF, or CONI. Now in case you guys are interested, I started buying shares of CONI just as of recent. I think I have like 50 shares or so, and my average cost is somewhere pretty close to around $12 per share. Now I started buying some CONI shares because the income has been somewhat consistent. The income is extremely high, and I don't personally think there's going to be that much more downside for Coinbase. The underlying, I'm pretty bullish on it. So just as a gamble position, I bought a few shares of CONI, again to see what happens. Now again, I'm bullish on CONI at these levels, but for the investors that bought back here, even though at one point CONI was trading at around $29 per share, it has since then dropped quite a bit. It's down around 43%. Now get this, CONI has paid around $18.41 in dividends over the last trailing 12 months. So even if you lost a significant portion in your investment value, the income is probably made up for it and then some. Which is sort of just the crazy landscape the ultra high yielding ETFs are pretty much playing in right now. I mean, this ETF, as of right now at least, paid well more than the entire ETF is worth in the last 12 months. Now, another interesting aspect about this is that there's some investors that over the last 12 months or so bought it at the right time and maybe even have 100% of their entire investment paid back to them. So now they're playing with the house's money. So now even if CONI goes to absolutely zero, some investors are actually in the green. But again, that's sort of a crazy strategy to even think about. Now, can CONI keep dropping from here if the underlying keeps trading like it has as of recently? Of course, it definitely can, but out of all the Yield Max ETFs for me personally, I like CONI. Now, another one that's lost a ton of value is ULTY, the Yield Max Ultra Option Income Strategy ETF, down around 60%. It's paid out around $11.13 over the last year, 135% yield. Again, another one that's absolutely crazy. Now lastly, before I share with you guys some high yielders that have zero NAV decay and actually have grown over time, Defiance S&P 500 Enhanced Option and Zero DTE Income ETF, or WDTE, this ETF is down around 35%. It's paid around $20 more or less than last year and yields around 50%. Now, a few ETFs that don't necessarily yield as much as some of those other ones, but these ETFs have all grown over time, at least so far since inception. First off, we have QQQY, the NEOS Nasdaq 100 High Income ETF. It's around a 14% yield, very consistent payouts at least every single month. And this is ever since it started trading. This ETF is up around 8%. It's not up a ton, I get it, but it is up in the green and pays out a massive 14% yield. Another one, the NEOS S&P 500 High Income ETF. This ETF pays around 12%, very consistent payouts, it's up around 8% also. Again, nothing insane incredible, but zero NAV decay here. Another few, of course, jepi is up around 20% in the max time frame, but on top of that pays anywhere from 7 to 10% yield. Now lastly, JEPQ pays around a 10% yield and is up around 18 or 19%. So those are some of the craziest NAV decaying ETFs that I've come across over the last year or so during my investing. And like I said, guys, there is a strategy out there for everything. If you want to buy into something that's going to potentially decay over time, but pay you a massive boatload of income, use some of that income to buy back into more shares, lower your cost basis. I get it, there's different strategies out there for different people. But I just wanted to sort of open your guys' eyes and understand exactly what some of the actual NAV decays look like in the entire landscape of high income investing, along with some different ETFs that haven't decayed whatsoever. But now lastly, most importantly, before I go, I do have one last question for you guys down below. Out of all the different ultra high yielders out there right now, what's your number one favorite of all? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.